Okay, let's jump right in. We're tackling a story that really made some serious waves this year.
Right.
Donald Trump's push against Federal Reserve Governor Lisa Cook, trying to sideline her, maybe even remove her.
Yeah, that got a lot of attention.
And if you were just reading the standard headlines, you saw all these warnings, right? Chaos, market disruption, attacking norms.
Standard playbook, really.
Exactly. But today, we're doing something different. We're taking those headlines and running them through a completely different lens. Our mission here is to dig into a specific set of sources, a body of material offering a pretty radical anti-capitalist critique of the whole situation.
Yeah.
It basically flips the entire narrative about the Fed.
It really does. And we're diving into this central claim from these sources, which is, frankly, quite provocative.
Which is?
The idea that the Federal Reserve, well, it's never actually been independent in any real sense, not truly.
Okay, so not the neutral referee we often hear about.
Not at all, according to this view. The argument is that the Fed was fundamentally designed from the start to safeguard capital, to make sure the financial system works smoothly, primarily for the benefit of investors and the wealthy.
So this big political fight we saw, Trump versus Cook, framed as this threat to governance.
Yeah.
This perspective says, hold on, that's just noise. What you're actually watching is a power struggle inside what they call the House of Capital.
Exactly. It's like an internal dispute among different elite factions over who gets to control the levers of monetary policy.
Okay, that's a fascinating frame. Let's unpack that argument. Where do we start?
Well, first you have to tackle the myth, right?
The myth of independence.
Yeah. The standard story, the one you always hear, is that the Fed is this, beacon of nonpartisanship.
Wait, the technocrats.
Yeah.
Insulated from politics, just looking at the data.
Brilliant economists, financial wizards operating purely on objective analysis. That's the image. And these sources argue, well, that's exactly the myth they need you to believe. Because, they argue, the Fed's actual purpose isn't political neutrality. It's about guaranteeing the stability of the capitalist system itself, full stop.
Okay, how do they support that?
You look at the tools, right? Interest rates, liquidity injections, quantitative easing, all that bond buying.
Yeah.
These sources say those tools are primarily calibrated to protect the big players.
Yeah.
Banks, corporations, investors. The Fed acts as the ultimate backstop, the insurer for the financial elite.
So when the Fed talks about independence...
Yes. This is crucial. According to these sources, independence means two things happening at once.
So.
First, it means independence from public accountability. Decisions are made by unelected boards, often behind closed doors, very little direct public input.
Right. No voting them out.
Exactly. But second, and just as important, it means maintaining absolute, unwavering dependence on the needs and demands of capital.
Dependence on capital. How so?
They argue the Fed has to serve the needs of financial markets. If investor confidence collapses, the whole system could seize up. So its independence is only from the public, not from the underlying economic powers.
Is that dependence just theoretical, or is it, built in?
Oh, it's structural, absolutely. The sources point to things like the makeup of the Fed boards, the regional banks. Think about the revolving door, people moving between senior Fed positions and top jobs at major financial institutions.
Right, you see that a lot.
And the constant consultations with powerful market players. Policy gets shaped by those interests long before we hear about it. If your goal is stability for capital, you naturally involve and often hire people aligned with capital.
Okay, so the theory is serves capital, not the public interest in the same way. How do the sources test this?
They look at the crisis points. When the system is under maximum stress, how does the Fed react? That's a litmus test.
And the big ones are 2008.
2008 is the classic case study. Yeah, the global financial system basically froze. Total meltdown threatened.
I remember that well.
And the response. Swift, massive intervention. QE, bailouts. The sources emphasize this wasn't aimed at, helping homeowners facing foreclosure.
Yeah.
It was about recapitalizing the banks, stabilizing the very institutions whose speculation caused the crisis, making sure they survived.
Okay, then fast forward. 2020, the pandemic hits. What happens then?
Same pattern, but maybe even faster and bigger, almost instant mobilization.
Really?
Yeah, within weeks of lockdowns, the Fed activated all these emergency lending facilities, pumped trillions into financial markets. Why? to prevent a collapse in the corporate bond market, mainly.
So again, focus on the financial plumbing.
Exactly. Providing liquidity and stability, first and foremost, for the largest banks and corporations.
And this is where the sources really draw that sharp contrast, isn't it?
It's stark, almost cartoonish, like you said.
Trillions flowing into Wall Street basically overnight. Markets stabilized instantly.
Right.
Meanwhile, millions of ordinary people are facing unemployment, eviction fears, struggling to get basic relief through slow bureaucratic channels.
That huge disparity for these sources, that's the smoking gun.
Yeah.
The speed, the scale, the target of the response. It all points to prioritizing financial assets over human lives. It serves class interests, they argue, not some abstract national interest.
Okay, accepting that framework for a moment, how does it change how we see the Trump versus Cook situation?
Well, it reframes it completely. It stops being this, existential threat to democratic norms, just an internal squabble, a turf war. Trump trying to remove a governor isn't seen as an attack on the institution's fundamental role. It's seen as one faction of capital trying to gain leverage over another faction within that institution.
Okay, let's define those factions. Capitalism isn't monolithic, right? The sources talk about different interests.
Definitely. It's not one big happy family. You've got finance capital, like big banks, asset managers. They usually low inflation, stable returns. Then you might have industrial capital, maybe manufacturers, developers, often linked to certain political groups. They might prefer, say, easier credit, maybe a bit more inflation to boost their specific sectors.
And they're fighting over Fed policy.
Precisely. Who gets to set the rules? It matters hugely. If the Fed hikes rates aggressively, that might be good for bondholders, for finance capital.
But bad for manufacturers needing loans or real estate developers.
Exactly. Higher borrowing costs. So Trump's move, in this view, is just an attempt to muscle his allies' interests into the driver's seat, to tilt monetary policy and credit allocation towards his faction.
So he's not trying to, dismantle the Fed or make it serve workers.
Not at all. The sources are clear on this. He's not challenging the fundamental purpose of the Fed. He just wants his guys controlling the fortress. The fortress itself, they argue, remains designed for the wealthy.
Okay, this really shifts the focus, which brings us to the language used, especially those warnings about chaos.
Yes. Chaos in the markets.
What chaos are they actually talking about? This is where the sources get really interesting, I think.
It forces you to define terms. When the commentators, the financial press, the economists warn about chaos, what do they mean?
Stock prices falling?
Pretty much. Volatility. A drop in share prices, maybe investor confidence takes a hit. Anything that disrupts the smooth operation of speculative capital, the process of making money from money.
That's the stability they're defending, the stability of asset prices and financial flows.
Precisely. Stability for capital accumulation.
But the sources say, wait a minute, there's another kind of chaos.
A completely different one. If that's the elite definition, what's the reality for most people?
And they argue that for the working class, chaos isn't some future threat they need the Fed to prevent.
No, it's the daily reality. It's the baseline condition under this system.
What does that look like?
It looks like stagnant wages, right? Wages not keeping up with the cost of living. It looks like precarious work, gig jobs, no security, crushing debt, student loans, medical bills.
The constant fear of losing your health insurance or your housing.
Exactly. That systemic insecurity, that permanent economic anxiety for billions. That is the chaos the sources are pointing to. And it's the chaos that gets completely ignored when the discussion is only about market stability.
So the system itself is chaos for most from this perspective.
That's the argument. The stability the Fed protects is stability for a very small segment holding the assets.
That's a powerful reframing.
It changes how you hear those headlines.
It really does. Now, interestingly, the sources suggest Trump's whole maneuver, trying to oust Governor Cook, actually did something useful. Inadvertently.
Yeah, it sort of ripped the mask off in a way.
How so?
It exposed the fragility of that whole neutrality facade. When a president just blatantly tries to impose political will on the Fed, it makes it much harder to maintain the myth that these decisions are purely objective, purely economic, untouched by political interests. Everyone sees the strings being pulled, or at least the attempt.
And when that myth starts to crumble,
it opens up space for a much deeper question. The sources pivot here. They stop just debating whether the Fed is independent or not.
And ask,
why should this immense power, the power to shape the entire economy, decide who gets credit, who survives a crisis. Why should that rest with a tiny, unelected elite anyway, regardless of whether they're independent or not?
Right. Which leads directly to the alternative vision they propose.
Exactly. If the current setup is, as they call it, a dictatorship of capital.
What's the democratic alternative?
Yeah. They ask you to imagine something radically different. Imagine a central bank not run by ex-bankers or academics tied to finance,
But
by representatives of, say, workers, unions, community groups, environmental advocates, people representing the broader public interest.
Okay. How would that change things? What would be the goal?
It flips the entire mandate. The goal wouldn't be just targeting inflation or maximizing shareholder value.
It would be.
Explicitly aiming for social outcomes. Using monetary policy, interest rates, credit allocation to achieve things like genuine full employment. Not just low unemployment, but good jobs for everyone who wants one.
Well,
Guaranteeing affordable housing, accessible education, funding a just transition to a green economy, ensuring public health. The goals become social well-being, not just market stability.
Can you give a concrete example? Like, how would credit allocation work differently?
Sure. Instead of just pumping general liquidity into banks, hoping it trickles down, which often just fuels asset bubbles, right?
Yeah, we see that.
A democratic central bank could direct credit, say, offer near-zero interest loans specifically for building affordable, sustainable housing or for community-owned renewable energy projects.
But maybe restrict credit for, say, speculative real estate ventures or fossil fuel expansion.
Exactly. Prioritize productive social investment over financial speculation. Use the power of credit creation for public good.
So the whole purpose of the institution gets inverted. Instead of protecting existing wealth, it focuses on creating broad-based well-being and stability for the population.
That's the core idea. The sources are pretty blunt. The elite defends the current structure because it is that dictatorship of capital where market demands always trump human needs.
Okay, so wrapping this up, the broader lesson here for you, the listener. These clashes, like Trump versus the Fed, they aren't just weird moments in a toxic political climate.
No, the sources see them as symptoms. Symptoms of the permanent instability built into capitalism itself, a system based on competition, exploitation, and conflicting interests.
And the challenge isn't really about defending the Fed's independence, which this analysis sees as a sham anyway.
Right. The deeper challenge is rejecting the whole premise that the economy's health should be measured solely by the health of financial markets.
So where does that leave us? What's the final thought for people to chew on?
Well, the conclusion from these sources is pretty stark. True stability, real economic and social stability for everyone, isn't going to come from tweaking or defending the institutions designed to protect capital. They argue that the real disruption needed isn't the kind Trump might cause in the markets. The real disruption needed is the disruption of this economic order itself.
A fundamental shift in priorities and power.
Exactly. Something to definitely mull over the next time you see those headlines flashing warnings about market chaos. Ask yourself, chaos for whom?